Alrighty. So today was a pretty messy day because it was bank holidays in New York, so there was nothing to do in New York session. But even with that, I'll try to break it down for you guys. So look, on 4 hour, let's say 4 hour is our higher time frame. We are pretty bearish, right? We just broke the range right now. And are tracing but the overflow would be bearish overall. And you also see, let's say on 1 hour. Oh no, start with 1 month. We are in this sell to buy zone still on monthly. So that's why we are seeing so many bullish reactions, even though we are bearish in intraday perspective, or even intra-week perspective. For 1 hour, before this, yeah. So you see, Thursday made a reversal, and I told you, wait, yeah, okay, yeah, okay, sorry, a reversal, and Friday respected it as I said it would. Right, we broke the range, and Monday is a reversal, so this could be a low for a few days, could be, nothing is confirmed. Oh, and for intraday perspective, intraday trades, I'll break it all down. But today was nothing crazy. There was no major move or something like that. But yeah. So this is the Asia session. And as you can see, it's building liquidity, right? It's in the middle of engineering liquidity. So what does it mean for us? It means that the price will sweep liquidity as big as this. So imagine this was $10 billion buy side liquidity. They will swipe $10 billion of sell side liquidity. So what I think it said was this, right? Was this low? Right. So this is a liquidity that was swept for this. This is the number one, this is number two. In priority wise, you see you had a Sydney session, which I don't trade. There's nothing to be traded there. I mean, it's just slow, choppy continuation of what? Of Asia session. And then Frankfurt Open, which is this gray line. You can see like every Frankfurt Open, like most of Frankfurt Open is a false move to grab liquidity and induce people to go to the opposite side of the market. Right, so first of all, you have this build up right here. And you see it's engineering liquidity. So you're looking for liquidity that is equal to this, which is this, right? So you could have taken sells here if, but it would be not too risky, not worth the risk, but it's possible to sell there if you saw the liquidity sequence. Right, after Frankfurt Open, right? And with Frankfurt Open, you have a liquidity sweep of this build-up. What happened? Oh yeah, sorry. So this is a first sign of a reversal, the manipulation. But in the middle of manipulation, you don't know where it ends unless it's break this range, until it breaks this range. So this would be our BOS, whatever. It break this range. And could you have get involved in these buys? Of course you could. Let me replay it, how it looks. Yeah, look. So how could you have entered here? Breaker transfer. Yeah, this would be our breaker. This was the buy to sell before it turning into sell to buy. Do you see this wick? Today I posted on this on Discord that every single wick is a buy to sell or sell to buy range. Every wick has its range. So this is a buy to sell, this is a buy to sell, and this whole thing is a sell to buy. You could have seen it from this point of view, find it from this perspective and may have this as a whole buy area, or you could have refined it to the breaker area, which would be better, because in scenarios like this, liquidity grab and then like immediate move up with huge volume, price rarely, if ever, comes back into these lowest prices. I mean, it's not common for price to do that. So this would be our buy area, and this could have been the first buy of the day, which I missed. I was sleeping. So yeah, okay. This is the buy, and I think, yeah. And then our entry model. If you missed the first buy, you could have had this as a break of range, and before breaking the range, you'll see that price, this buy to sell. Yeah, that's better. This buy to sell was transferred to here, and then into this sell to buy, right? And this whole range would become your POI, your valid POI. It's in one of those entry models that I sent you. So this whole thingy would be your POI. After mitigating it, this whole thingy would be your POI. So this could be a first entry. Stop loss would be this. And it's like 3.5 pip SL. And then after mitigating it, this whole candle could be your stop loss, could be your POI that you could have bought from. Okay. So you have like 1, 2, 3, 4, or even 5 entries that were possible. And what could have targeted this liquidity. This right here. All right. So if, let's say, you missed all those buys, all right, then what? There's even a way to enter on this. I'll show it to you. You have a range. Price breaks the range, but transfers orders before making this a lit. I explained it yesterday. Why lit points are not lit points immediately, but it becomes order flow before that. So this could be your POI as well to enter off here. And if you take a range, if you take Fibonacci, I mean, this would be better as a range. It would align perfectly with 50%. I mean, it's still a good trade to hop in if you know your bias, if you know the reasons why the price is going back up, if you know why London is going back up, just because of this little manipulation down. All right, so okay, price came back here. This would be your POI, right? And right, look, before price broke this range, this buy to sell, it transferred orders into this. Okay, so there should be something in here on seconds, but you're not seeing it. So that's why this POI didn't hold. There was something here. So I don't expect you guys to be able to enter here, and if you did, your stop should have been way lower. And after breaking this becomes your lit point, right? And that's how you get these buys, or confirmation that this is a valid area to buy from. There's nothing here. The sells are pretty bad to take, but I mean, again, it's just the lit point, nothing else. All right, you had a break here. Price came back into it, made this a lit point, and this would be your POI or confirmation. Oh shit, not this. This. Yeah, perfect. But I mean, you should not sell. You should not have sold because your daily bias is bullish. As you have seen on my stories or chart, I was buying all day. All right. So if you miss this, then again, there are another entries. You have this buy to sell and becomes sell to buy, breaks the range, and it comes back to the extreme, which I didn't really expect. But I mean, happens. You see, this is the time when you just use mitigation, because it's not fast, it's not a huge liquidity grab or something like that. You are not mitigating any major area from the left that would push the price up fast to not be able to come back to the extreme. This is just a slow build up. And as you can see, we are entering on the trend line, right? And this is a huge mistake I see SNC traders do. They usually just see a trend line and they think it is liquidity. Well, it could be liquidity, but it's in the middle of engineering process. And for this trend line to be taken, it has to take liquidity equal to this. So what's like similar in size to this is this, right? Again, is this build up from the Asia. So I did not expect this to be broken until we broke this. This is a protected protected trend line. It sounds weird, but it is what it is. Is yeah. So that's the reason why I don't see trend lines as liquidity, but on lit points and user release and previous day high, day low, week high, week low, and stuff like that. Okay, so you could have got a buy here. If you missed this, you got this as a POI and got into buys again. And then lit point, you see the price broke this, came back to the range, right? And this could have been another entry. If we missed all those entries, there was like 20 entries today. And this would be a protected stop, or even this wick right here, which would be the last sell to buy. This right here. And if you're asking what was the POI for this, it was just a break transfer through this inefficiency. All right. So for the sells, this is pretty hard to catch, and it doesn't really make sense to sell there. And see, oh, the trend line. Let's keep it there. See how it's protected. Oh, it's not violated, not even once. And now we just broke this range. We came back, made another lit point. We just swap right here, making this a valid area for buys. And it even lines up with the trend line liquidity that is protected for now. So yeah, this would be your last sell to buy, right? This whole range. And this is your lit point. And then you could have refined it. Let's say this was your order transfer to this. Let's say this week, transfer here. And this was your last money transfer, last mitigation, whatever. So I entered off here and my stop loss was here actually, but this would be the correct way to do it. Right here, especially when you're beginning and you don't have that much experience, you just put it at the nearest protected stop. Right. So I got this entry. Let's see here. There. And okay. And then you see another entry model. Oh, this is not the one, but yeah. We broke the range. The price came back in, made a lit. Yeah. This would be a point. Wait. Okay. So, I mean, there were so many entries right here, and the correct target for these buys should be either this, there was a gap, but this broker doesn't show it, but there was a gap right here. And yeah, this should have been the target, which it never reached. My second target was this, which it never reached again, or not yet. So yeah. So that's why you take partials. Yeah, my second entry was here, right? Oh, I'm sorry, I'm real tired today. All right. As for those cells, not possible to be taken. And then you have New York session, which has nothing into it. I mean, it was again, you see the order flow, how it's slowly mitigating, transferring these orders from left to right. This would be protected for you, and you could have bought from this whole thingy. And again, I bought from there. There was another trend line that I saw, which was, I think this. Yeah. And you see, it's protected again, right? Until we clear liquidity equal to this, which for me was either this or a lit point. And lit point is the highest liquidity level, the biggest liquidity pool that you can find. And which was this one, or even this one, but I just saw this one in real chart. But if we're gonna test it, yeah, it was this one. After price broke this range, came back, made a lit point, which was a pretty valid point for reversal. You could have caught some sells here. I mean, today's price action was really slow, but it was simple. It was textbook. It was just order flow and building liquidity, protecting it. Nothing crazy. All right. I mean, that's all there was today. I mean, it's a short call. There was nothing to show, really. Oh, sorry. Okay. Do you have any questions? Ronaldo, you're new here. I know it can be too overwhelming for you. Too much new information, I guess. But I mean, it's nothing new. It's just a different point of view and a correct view, I believe, in the market. All right. So, I mean, all is clear. Okay. I'm fine. Hopefully tomorrow is gonna be faster day and we'll have a longer breakdown than this and more questions. Okay. Have a nice day.